Alright, good day everyone. I believe each and every one of us here have gone through the last video we posted on structures and also on candle range, that's CRT. And I believe each and every one of us here can mark structure properly now. You can mark structure the right way and you can also frame your entries using candle range, that's CRT. For those that just join us newly, if you don't have access to the previous videos that I just talked about, I would advise you to go to our Telegram channel. Just go to Telegram and search for Zenith Trees and download the last two videos we posted there. That's on structure and on CRT. Try to get the basics idea of the things we discussed there before you come to continue with this third video on premium discount arrangements. The reason I'm advising you to go and watch those two videos first is because the hedge we are trying to share with you here at Zenith Trades, there is no way you can get a premium discount arrangement properly, like fusing it together, if you don't have the basics idea of what we discussed in those two videos. That is, those two videos we posted earlier on CLT and on structures. So we advise you to go and get the basic knowledge of what we discussed there before you continue with this third video, before everything will make proper sense to you. All right. So let's dive in proper into premium discount arrangements now. What are premium discount arrangements? That's PDRA. It's popularly known as PDRA. Some people call it price delivery arrangement. Some call it premium discount arrangement. It's all the same. It's popularly known as PDRAs. So they are levels of blocks created during price delivery. These blocks or levels, they are created when price is delivering from a premium zone to a discount zone, or from a discount zone to a premium zone. All right. So once they are created, we expect price to react at these blocks or these levels when price return or retraces back to them. So if these levels, if they are strong, these PDRs, if they are strong, once they are created, if they are strong levels, the reaction often leads to the reversals, right? When price retraces to them, we expect price to reverse. But if they are weak and eventually they got broken, then they often get retested before price continue with its trend in the same direction. All right. So there are PDRA metrics, right? Or hierarchy in order of their importance. But the hedge I'm trying to share here, the hierarchy or the metrics may not be that much like important to us now. What is important to us is how they are formed, right? So let's discuss their formation before we come back to discuss their metrics. That is the hierarchy of how they are important in price delivery. So we're going to look at PDRA's formations, right? And the first PDRA we're going to look at is what we call the order block. The order block. An order block is simply what we refer to as change in state of delivery. All right. So when price is delivering from let's say a premium zone to a discount zone, or let's say a bearish order flow, when price is creating lower lows, lower highs, lower low, lower highs this way, right? And suddenly price just shifted bullish, right? This is what we call a change in state of delivery. Why is it a change in state of delivery? The previous state of delivery was bearish. It was a bearish order flow, right? But suddenly price shifted bullish. So price shifted from bearish to bullish. This scenario is what it created a block refers to as order block. So the last candle that was created, some people call it the last bearish candle before the bullish move is what created the order block. But the color of the candle may not necessarily matter. What matters is the orders, the bullish orders that resting in this region before that eventually leads to the change in state of delivery is what we refer to as what order block, because there are numerous orders of buyer here that came into the market that make the change in state of delivery possible from bearish to bullish. So you mark out the last candle just before the move, before the bullish move, and in this way this is a bullish order block, right? This is a bullish order block. If it is a bearish order block, if the previous order flow was bullish, then eventually suddenly changes to bearish, then it is a bearish order block. But for this case, this is a bullish order block. So this order block that is created now, we anticipate that when price retraces or returns to this order block, it should hold and propel price higher, right? Price will retrace back to it to pick the orders that were left, and once price gets to this order block, we expect it to hold, then continue with the bullish movement. So this is what we call a bullish order block. So this order block was created as a result of change in state of delivery. So this is the first PDRE we will look into, and the name is called order block. Now we said if price retraces back to this order block, we expect price to hold, right, is going to serve as a support level, then pushes price back upward. In case, what if in case it failed? If it failed, right, if as price is retracing, instead of it to hold price as a support, but eventually got broken, maybe it gets a little, just little reaction and eventually got broken, then in this case, this other block has failed. And we expect now that when it failed this way, price will retest it and continue with the bearish trend So once price retests it this way and continue the bearish trend, it created another PRE, right? And this is called a mitigation block now, a mitigation block, right? You can call this a mitigation block, and there are some cases it can be also breaker block. I'm going to let us know the difference between a mitigation block and a breaker block. You can see other blocks, when other block failed, it will result to what? A mitigation block, either a mitigation block or a breaker block, right? So it was the failing of other block that give birth to mitigation block or a breaker block. So how can you differentiate between a mitigation block and a breaker block now? I said a other block has already failed, right? We expect it to price to retest that same block before it will now continue, right? So in the process of failing, we don't expect any reaction here. And even though there's a reaction at all, it should be negligible, right? For this mitigation block to be high probability or a breaker block to be high probability. The reaction we are expected to see here should be negligible. It shouldn't be that, okay, price will come here first, then reacted this way before going down. No, 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 no. It should be negligible, right? Then, and there should be a presence of fair value gap. We don't know what a fair value gap is. Now, we will get to that. But just know at the back of your mind that there should be a presence of a fair value gap in this region. As the price is failing, it failed with a what? Big momentum. The pressure at which price runs through this block is with what? Creating a fair value gap. We know what a fair value gap is. Now, once it has failed, we expect a retest. Once it resets and continue with the trend, that's what we call a mitigation block, right? Or a breaker block. So what's the difference between a mitigation block and a breaker block now? All right, let me delete this so that will tell us the major difference between a mitigation block or a breaker block. When other block failed, right? If an other block failed and gave us a retest and price retested the block before moving, we said that is a mitigation block. There's a scenario we can call it a mitigation block, and there's another scenario which it will also be a breaker block. So what's the difference between a mitigation and a breaker? That's what we wanted to find out, because a lot of people do have this mistake. They will see a mitigation block and be referring to as a breaker block, or they see a breaker block and they will be referring to it as a mitigation block. They are different and they have different purpose. A breaker block support reversals, whereby a mitigation block support price continuation. So let's say we have a bearish order flow this way, we have a bearish order flow this way, we have a bearish order flow this way. Price is coming, creating lower low, lower high, lower low, lower high, and eventually tap on this block. Let's say this is a higher time frame block now, or higher time frame PDRA. The moment it shifted bullish, right, and continue with the bullish trend, there is what we call change in state of delivery that have already happened. At the same time, market structure shifts, right? Market structure shifts happen here, right? Market structure shift or shock happen here, right? So if shock happen in that region, when price is coming to retest the last old high that was invalidated before retesting, it gives birth to a breaker block. It gives birth to a breaker block. It gives birth to a breaker block. So the last high that was invalidated before price retesting is what we call a breaker block. So most at times you find a breaker block when there is change in direction of price movement, right? When there's a shock, when there's change of character, whenever you find a change of character, that's are the areas you find a breaker block, because breaker block support reversals, right? They support reversals. For the case of a mitigation block, a mitigation block support continuation. So once we have a bullish order flow this way, you see the last high, the old highs that were invalidated before price coming to retest, is what we refer to as a mitigation block, right? So can you differentiate between a mitigation and a breaker now? A breaker, the last hold high that was invalidated has to be from the previous trend. What I mean by the previous trend, look at this trend. The trend was bearish in the first place, right? Before there is a change of character happening. So the last high that was invalidated before price retesting is what refers to as a breaker. So in this case, it supports reversal trade. It supports reversal, right? But for the case of mitigation, it is from the existing bullish trend that we find support for continuation. The last old high that was invalidated before price coming to retest is what gave us the mitigation. For the breaker, the high was from the previous trend. So that's why I said most of the time for you to find a breaker block, it has to be from the previous trend. If it is this is for bullish scenario, if it's for bearish scenario, if price was bullish, right? If price was bullish before changing of character and turning bearish, the last low before change of character will serve as your breaker, whereby the recent lows that support price going lower will be mitigation blocks. I believe you understand this. If you don't understand this, just come back and watch this video several times and explain and listen to my explanation. Your take from here is for a breaker block to support price, it must be from the previous trend, right? Whereby for mitigation, it has to be from the existing trend. I believe you get my explanation. A breaker block has to be, the support has to be from a previous trend. The support of either the low or the high has to be from a previous trend, whereby for mitigation, the support has to be from the existing trend. So these are the two difference, and their characteristics of a breaker or a mitigation block is that it will invalidate a high or low, right? The other block that was invalidated before retesting is this one, this for breaker. The other block that was invalidated here, the old high that was invalidated is here, right? It was, instead of it to hold price going down, it got broken, then price retested. Here, instead of price, this block to hold price, it got invalidated, broken, then it retest. This one was for previous trend. This high was from a previous trend, whereby this high is from the existing bullish trend. Okay, that's the two difference. So they must invalidate either a low or a high, then it must have a fair value gap. For breaker block, it support reversals, whereby for mitigation, it support the existing trend, right? It support the existing trend. It support continuation, I mean. Yeah, existing trend or support continuation. So mitigation support continuation, and where breaker support reversals. All right. And for breaker, we found it immediately have change of character, but for mitigation, it support existing trend to either keep on moving bullish, that is if it's for bullish scenario, or bearish if it's for bearish scenario. So that's the two difference between a breaker and a mitigation. So if a breaker failed, let's say a breaker failed, instead of it to hold price, it eventually failed. That gives birth to reclaim block. So whenever you see a mitigation block or a breaker block that failed, it gives birth to what we call a reclaimed block, right? So, and this reclaimed block is what we pay much attention to, because it's what we'll be looking at in the hedge we are trying to share here. All right, we have discussed what an order block is. We said if an order block failed, it gives back to a mitigation block or a breaker block, right? What if a breaker block or a mitigation block now failed? It gives back to what we call a reclaim block. Look at this, is the explanation we're trying to give. This price is bearish this way, price is bearish this way. It tap on this block here, that's an order block. So instead of it to hold price, right, instead of it to hold price, okay, let's say for another block to form, this is order block. So coming to retest now, instead of it to hold price, right, it eventually failed. Once it failed, we anticipate it to what, give us either a mitigation block or a breaker block. A mitigation block or a breaker block, right? as the case may be. I've explained the difference between a breaker and a mitigation. So once it failed, we expect it to give us either a mitigation or a breaker. But for the case of reclaim block, let's see what will happen. So this is the right way to draw the other block. So let's say this is the other block that gap filled. This is the block that gap failed. We anticipate it to hold, but it eventually failed. Now that it has failed, if it's going to be valid for it to form either a breaker or a mitigation, then price is going to retest. After it retests, it will now continue with its bearish trend. But what of if this breaker, this mitigation or breaker that's going to form, if it essentially gets reclaimed, let's say it break it up again, instead of it to just retest and continue, but eventually break it up again. Now this is what we call reclaimed. Why is it reclaimed? It has failed the first time. It failed the first time, right? Giving us either a mitigation or a breaker block. But instead of it to just retest and continue to confirm the breaker or the mitigation, it reclaimed the block again. And after it has reclaimed the block, broken it up, then we expect the retest now. So once we expect the retest, it means it's going to retest this block and moving bullish. So what happened here? In this first scenario, price supposed to hold, right? Literally here price supposed to hold because it is an order block. We see an order block after another block has been created. When price come back to them, we expect them to hold. We expect the reaction we expect is for them to hold price and price reverse, but eventually failed. Once it failed and got broken, then it created what we call a mitigation or a breaker, as the case may be. We know the difference between a breaker and a mitigation. A breaker is for change of character and it support reversals. Mitigation is for continuation, right? So what if after it has failed, we expect it to create a mitigation or breaker, but eventually it got broken again? So this is the first failure, but the failure is reclaimed back. So it reclaimed back up. So after reclaim, we expect a retest and to continue with the first, what's it called? What we expect from the other block. After it got reclaimed, then the function of other block, what this other block supposed to do in the first initial stage, it will now do it now. After it got reclaimed, it will retest the block, then do what it's supposed to do before. Did we have what's it called? Did we get this explanation? So look at other block. We expect other block to hold price. When price retraces and touch it, it will go back up. If it failed, it give us what we call mitigation or breaker, right? But if mitigation and breaker did not work and got reclaimed, then we expect it to do what other blocks supposed to do initially. So that's why we call reclaim block. This block that was reclaimed, it is the other block that was reclaimed. So this number 5 reclaim block here, you can see that it reclaimed and go back to other block, right? It reclaimed the function of other block. So this broken, this invalidation that created this V shape is a liquidity sweep. He sweep this low, he sweep this low. So the reclaim block, anywhere you're seeing a reclaim block, is just a liquidity sweep. It's a liquidity sweep of the previous low or a previous high. So it's like head and shoulder for those that have been trading head and shoulder, right? So they are actually trading the reclaim block, but they don't know. It got invalidated, got reclaimed. After got reclaimed, then is now doing what other blocks supposed to do initially. So it will test it and pushes price forward. So this is what we refer to as reclaimed block. So you see, other block give back to mitigation or breaker, right? Now breaker and mitigation failed. Now give birth to reclaimed block. I hope you understand. Now, if this reclaimed block failed, as price got reclaimed, we expect it to push it further. What of the case this reclaimed block failed? If this reclaimed block failed again, so it gave us what we call reclaim mitigation or breaker. I hope we are not going to be confused here. So look at this first scenario. Other block has failed, right? This is the first failure. It got reclaimed, but instead of got reclaimed, I'm supposed to do what other block supposed to do. It failed the second time. If it failed the second time, then we have what we call reclaimed mitigation or breaker. Now let me give us the full details of what just happened. The first scenario is other block supposed to hold price to continue, but eventually it failed. After it failed, it gave us to mitigation or breaker. Now at mitigation or breaker, after retesting, price supposed to continue downward, right? After the fail, price supposed to continue downward like this, but eventually it got reclaimed. After reclaim, we expect price to tap on this block and continue with what other blocks supposed to do initially. But after tapping on it, it didn't hold. It got broken again, failing the second time. So this is the first failure, this is the second failure. If it failed the second time, that is what we call reclaimed mitigation block or breaker block. So after failing the second term, so this second failure will give us what mitigation or breaker supposed to give us, right? And what did mitigation or breaker supposed to give us? We're supposed to expect a retest and continue. So in this, after failing the second term, we expect a retest to continue lower. I hope you understand this whole, what's it called, explanation I did. So a breaker block gave birth to how many blocks now? A mitigation block or breaker, right? So failing of mitigation or breaker gave birth to reclaim block. Failing of reclaim block gave birth to reclaim mitigation or breaker. I hope you understand this. All right. So that is order block. That's the first premium discount arrangement we have discussed, and it gave birth to 4 other blocks we're going to see in the market. So this reclaim block is what we are going to pay attention to, because the head we are trying to share here is what we are going to be using mostly, right? Is what we are going to be using mostly. After it got reclaimed, right, we expect a retest for price to continue bullish. So it is the reclaim block we pay attention to mostly, because it is the hedge we are going to, is what we are going to be using to frame our entry pertaining to the edge I will share in this very video. So reclaim block is actually a sweep of previous low or previous high. So once it has swept, it will got reclaim and continue with the intended direction. So if it is on M15, this V shape that you see that got broken and sweep liquidity, if it is on M15, you're going to see it in form of inverse fair value gap. We don't know what inverse fair value gap is. I will also explain that in a short while. If it is on 4H, you're going to see it in form of a wick, a candle wick. All right, it will just wick the previous low or previous high, and the candle will close this inside. If you have watched the CR3 video, you should understand what I'm trying to explain. If it is in 4H, it's going to be in form of a wick. A wick will just sweep the liquidity of previous lows or previous high and close this inside. It will sweep the previous low of the candle, the range candle, then close this inside. But if it's on M15 or lower time frame, you're going to see it in form of small candles forming an inverse fair value gap or a balanced price range. We will discuss that. So let's move on to the next what's it called, PDRA. So after order block, we have a fair value gap. All right, if you don't know what a fair value gap is, it's simply a gap between 3 independent candles, right? I am going to explain that with a schematic diagram, but not to waste most of our time. Let's just move to where I will explain, because if I want to explain it here, I need to draw the candle and the wicks for you to get the detailed idea of what I will be explaining. So let me just move to where the drawing is so that you understand it properly. But after a fair value gap has been created, then it gives birth to what we call inverse fair value gap. From a fair value gap, you understand what inverse fair value gap is and what balanced price range is. Inverse fair value gap and balanced price range are derived from a fair value gap. So after fair value gap, we have what we call rejection block, old highs and lows, right? We also have proportion block, we have vacuum block. So these blocks, the ones we use mostly is what the other blocks and the what is it called, the blocks it give birth to. So we're not going to discuss proportion block or vacuum block. Proportion block is simply 2 other blocks on top of each other, and a vacuum block is just like a fair value gap, but the concepts are not the same. For the case of a vacuum block, it's just an opening, maybe where you see no trading activities occurring, or maybe the banks, during the bank holidays or festive periods, there's no any trading activities. That's a vacuum block. So they are not much in the, like we that were even trading indices, we don't have such kind of blocks, right? Because our price action is efficient. There is no bank holiday, nothing is affecting it. So we will only be looking at fair value gap. We're not going to look at a vacuum block. And for the proportion block, it's just two other blocks on top of each other, and it's very, very rare in the market. So we have rejection block, and we also have old highs and low. We will explain it into details. All right, let's move to details of how you're going to understand what other blocks and the rest of the blocks that were formed after the failure of an order block is. So this first scenario is what we call order block, right? You see, price was eventually bearish. This is a bearish order flow, and there is a change in state of delivery here. See, the previous candles were red, bearish candles, but eventually it got bullish here. So the last candle before this bullish move is a block. It created a block where there are numerous orders of buyers, right? So price coming back to pick those orders now. It is going to serve as a support, and this is what we call order block, which is eventually change in state of delivery. Price retesting this block give us a bullish move, right? So this is an order block, another block that hold. Now look at this second scenario, which is number B, option B. The same block that got that was valid here, that hold price, got broken without any reaction. Even though there's a reaction, is very, very negligible, right? So it must be a negligible reaction, and it must have a fair value gap. Most cases, once this block is invalidated with a fair value gap. You're going to know what a fair value gap is in a short while. So you see, it was invalidated, got broken, and once it's broken, we often expect a retest. Once it got retested, price is going to continue with its bearish movement. This is for bearish scenario. If it is for bullish, it will break it up, then get retested, then price is going to, if it is for bullish scenario, it will got it broken, right, then got retested, and price will continue with its bullish move. So just as simple as that, as simple as that. So this is a breaker block now. Now for mitigation, this is for what we call this breaker, because this trend is a previous trend, right? It was previously a bullish trend, then changes to bearish. Once it changed to bearish, created a fair value gap here. Once it got retested, it means it's support reversal, because this breaking of this what's it called, breaker, this block serve as market structure shift. So in this case, it is breaker block. Now for number C, after a breaker block got invalidated and got reclaimed, right? It got reclaimed. You can see here it got broken and it got reclaimed back. So after it got reclaimed, what other block supposed to do initially? It will now reclaim block will now do the job. It will got retested. After it retested the block, it will continue with the bullish trend. I believe you understand it properly now. So the first one is an order block. After order block failed, it gives to a mitigation block or a breaker block, as the case may be. Then the third one, after a breaker or a mitigation failed, the failure of a breaker or mitigation is what we now refer to as reclaimed. The previous block that was broken got reclaimed. After it got reclaimed, it will now continue with the intended trend movement. All right. So the failure of a reclaimed block, you see, a other block failed, it got reclaimed. This is the first failure, right? It got reclaimed. After it got reclaimed, we expect price to retest and continue, but eventually got broken again. So this is the first failure, this is the second failure. If we fail the second time, it gives us what we call a reclaim mitigation or a breaker block. So if the second failure will now do what mitigation or breaker is supposed to do, it will get retest and continue with its intended direction. So for this reclaim block, right? Reclaim block, we use reclaim block for M15 reversals. We use reclaim block for M15 reversals, but it will be a 4H pro trend, 4H higher time frame pro trend continuation. But for reclaim block, for reclaim mitigation or breaker, we will use it for continuation trades. We will use it for what? Continuation trades. Once we get there, you understand the details of what I'm trying to explain to you here. All right, so that is reclaim mitigation or breaker. Now the next one is reclaimed, what's it called? Okay, this is a, okay, good. Number E, now we have a breaker block. I said for a breaker block, the support, the old high that was invalidated will be from a previous trend. You can see this is from a previous trend this way, right? Here, This is the previous trend before the change of before market structure shift, before change of character happened. So the last hold high that was invalidated, that served as reversal, as support to this low, is from the previous downtrend. So that's a breaker block. After that breaker block, the next hold high that was invalidated, before price retesting it, is from this existing bullish trend. So that's a mitigation block. Price just come to mitigate it, then continue with this bullish trend. So that's the difference between a mitigation and a breaker block. A lot of people do have confusion when they wanted to like make use of a breaker block or a mitigation block. So this is the difference. What you just take away from this is breaker blocks is from the previous trend before a change of character, where mitigation is from the existing trend supporting price higher. That is if it's a bullish trend. Then if for bearish, it's just for trend continuation. Either bullish or bearish is to support price continue with its existing trend. Okay, so this is reclaimed what? This is breaker block and this is reclaimed mitigation, right? You see what happened here? Here we have a simple mitigation, right? This old high was invalidated, then it got retested going up. But for this case, just look at what happened here. Look at this old high, it was invalidated. Then we expect price to retrace to hit here before moving further, just like what happened here. What happened with a simple mitigation here. So we expect price to retrace to this block, then but look at what happened. It failed the first time. So after failure, a reclaim block, a mitigation block that failed, we give back to what? A mitigation block that failed will give back to a reclaim block, right? So after it failed, we expect it to give back to a reclaim block. But what happened? A reclaim block failed again. That's why we now have a reclaim mitigation. First of all, it was a mitigation. A mitigation failed. Then after it failed, it's supposed to give back to a reclaim block. But now a reclaim block has failed. So it is now a reclaim mitigation. I hope you understand this. Maybe when we go to the live market, will understand it more and more. But if you watch this video as many times as possible, you get the clarity of what I'm trying to explain. So this is a simple mitigation. This one is not as high probability as this one, because this one, if there's a fair value gap here, this one will give you almost 80 to 90% win rate, whereby this one will only give you 60% win rate. Like this one is the one that is common in the market. The simple mitigation is what is common in the market, especially on 4-ish. But if you can find this one on 15 minutes, then it's always old price as a support. Like before it can fail, once you are able to spot this entry, a reclaim mitigation or a breaker as the case may be, is almost 90% win rate. So a reclaim mitigation is high probability, whereby a simple mitigation is not high probability. But this one is the one that is common in the market. This one is not that common. So the fair value gap I was trying to explain earlier, you see the fair value gap here, right? You see these three independent candles, candle A, B, C. You can see in this first scenario there is no gap. What is a fair value gap? It's a gap between between the first independent candle and the third independent candle. For you to understand the fair value gap, it is a gap between the first independent candle and the third independent candle. Which one is the first independent candle? Candle A is our first independent candle. Candle B is our second independent candle, and candle C is our third independent candle. And they say it is a gap between the low of the first independent candle and the top of the third independent candle. So look at it this way. Look at the low of the first independent candle and the top of the third independent candle. Did you see any gap there? Of course, there's no any gap. Look at the second scenario. We have first independent candle, the second and the third. Look at the low of the first independent candle where it stopped. You can see where the low stopped, and the top of the third independent candle, you can see where the top is. Now you can see that it contained a gap. This block, we are able to have this block inside, and they did not touch each other. For the first scenario, you can see that they touched each other, so there's no gap here. Here there's a gap. So this is simply a fair value gap. This is what we refer to as a fair value gap. Now that we know this as a fair value gap, it's going to help us frame our CRT entry, because if you look at the first video, when you go back to the first video I asked you to go and watch, most of your reclaim blocks will form a fair value gap. As it's about to break the structure, it will form a fair value gap, and reclaiming it too is also going to form a fair value gap. That V shape I was referring to is going to form a fair value gap about breaking the block downward. That is, if it's breaking it downward, it's going to form a fair value gap on M15, and if it is reclaiming it, it's going to form a fair value gap too. The first fair value gap that was created, let's assume here it is a manipulation fair value gap, right? Just to sweep the liquidity of the lows or the high, as the case may be. Then reclaiming it, it will create another fair value gap. The second fair value gap is the real fair value gap. The first one is the imbalance, whereby the second one is the fair value gap that is going to be retested. The first one is manipulation, and this is the real fair value gap that is going to be retested to pick liquidity or orders that were left. All right. So once we see a reclaimed block, once we see a fair value gap, as at the price was, as at the block was, as in when price is breaking the block, we see a fair value gap, it is actually a manipulation. Expect price to get reclaimed, and once price got reclaimed, it's going to create another fair value gap. Also creating a change in state of delivery, because the previous state of delivery was bearish. Here it's a change in state of delivery happened, and it created another fair value gap that will be retested. So anything where you are seeing a reclaim block, expect inverse fair value gap. So the first fair value gap is inverse with the second one, and this is what we call inverse fair value gap. You can see the fair value gap here, the first one and the second one. So this is what we call inverse fair value gap. So now, what is a BPR? A balanced price range. Once you see this kind of scenario in the market, just look at the first fair value gap that's created and look at the second fair value gap that's created. You will see that, okay, which one is the smallest one among them? The intersection of the first fair value gap and the second fair value gap. Just draw your box so that it will always pick the smallest fair value gap among these two. You can see that this one, as price inverse it, this one is more wider, right? Look at the bottom of your candle E and look at the top of your candle C. This is the first independent, the second, and the third, as the price was inversing it. The top of your candle C, and the bottom of your candle E is the second fair value gap, right? The bottom of your candle A and the top of your candle C is the first fair value gap. So this one is the smaller one. Draw your box from the bottom here to the top. That is your balanced price range, and that's what's going to give you the sniper entry. Price will definitely come back to the BPR, the balanced price range, before it will respect. Before it is the balanced price range that's going to serve as support to your price once it has got reclaimed, right? So most cases when you see price reclaiming a block, if it is coming back, it's coming back to the balanced price range. It's coming back to the balanced price range. All right. So this is what we call inverse fair value gap, and it's the inverse fair value gap that gave us balanced price range. The balanced price range is just a refinement of the inverse fair value gap. That's all. A balanced price range is a refinement of the inverse fair value gap, so that we can find the sniper entry there. We can find the sniper entry. So this is a rejection block. A rejection block is just a doge candle, right? You can see this candle open here. It opens here, but first of all, go down to this very low before buyers actually troop into the market and pushes it higher. So you can see the wick is actually bigger, or you can see the wick is more wider than the body. So it means the buying pressure is much, creating a rejection block. So once you find a rejection block this way, it means when price come to retest this block, it's supposed to serve as a support. That is, if it's a bullish scenario, if it's a bearish scenario, it's going to serve as resistance, right? So this is a rejection block. I believe we have discussed all the PDRs listed earlier. We have discussed them. So okay, now let's look at PDRs. Let's look at PDRs, how you're going to fuse it together with price delivery. As price is moving from discount to premium, or from premium to discount, what is price doing? So PDRs and order flow. Let's look at it. PDRs and order flow, or PDRs and buyers. So is going to give us, okay, the respect of PDRs. That's what I'm trying to explain basically. So if in a bullish scenario, price retraces into a bullish PDRE, right, and respect then going higher. So in a bullish scenario, this way, price respect bullish PDREs and respect bearish PDREs, right? This is simple. This is just a simple structure, bullish structure, right? So in a bullish scenario, price retraces into a bullish PDRE and respect them going higher. So what are we talking about? Let's assume this is a fair value gap here. Right? Price retraces to this fair value gap and it hold price moving up further, and it disrespect this hold high that was created here. This high, there's an order block here, price break structure. So in a bullish scenario, price respect in a bullish scenario, PDRs were respected, right? Bullish PDRs are respected going higher, and it violates the bearish PDRs. Any PDRA that you find against the bullish trend is what we call the bearish PDRA. So in a bullish scenario, price respect bullish PDRAs and respect the bearish ones. Price violates PDRAs. Okay, price violates bearish PDRAs. Which one are the bearish PDRAs? Any PDRA that you find against this bullish trend is the bearish ones, and these other blocks. That's why these other blocks are got. You see a break of structure happen here, a break of structure happen here, a break of structure happen here. So price will always respect the bullish PDRAs, whereby it will be invalidating the bearish ones. All right, that's in a bullish scenario, in a bullish order flow. Price retraces down to sweep structural low. Okay, if you look at the video of structure, right, I told you the M formation that I say you should picture in your mind when you're marking structure. The middle of the M, that is the minor low, we call it the structural low. Price will always come back to sweep it. So that's why they say price retraces down to sweep structural low, right? Price will always retraces down to sweep structural low in a bullish order flow. Price sweep structural low and rejects higher. All right, price will sweep structural low and rejects higher. It's like I even have the diagram. This is what this means. Break of previous high, then price will come and sweep this structural low before moving higher. You can see. So this sweep is what refers to here. Price sweep structural low and rejects higher. Price creating a clear break of structure with displacement. This is a break of structure now. Price create a clear break of structure with displacement. You can see the PDRE here is disrespected and price break structure moving higher. That's for a bullish scenario. For a bearish scenario, it's just the opposite. For a bearish scenario, price retraces into a bearish PDRE and respect then going lower. So for a bearish scenario now, all the PDREs that are against the bearish trend will get disrespected, and the ones that are in line with it will get respected. Simple as that. Price violate bullish PDRAs. Of course, it will get violated because the trend is bearish. Price retraces. Price retraces up to sweep structural high. You can see here it sweeps structural low. The opposite is going to be sweep structural high, then and reject lower. Price sweep structural high and reject lower. As that, then price creates clear break of structure with displacement. That is what PDRA. That's how you can picture your PDRA together with price delivery. Any PDRA that is against a bullish trend will definitely get invalidated, and the ones that are in line with the trend moving up will get respected. At the same time, any PDRA that is against the bearish order flow will get invalidated, and the ones that are in line with it will serve a resistance, holding price going lower. Simple as that. So that's the relationship between the PDRAs and bias or the order flow, either bullish or a bearish order flow. And this is the explanation, the schematic diagram of what I just explained there. So how many PDRAs do we have here? We have this fair value gap. Let's assume this is a 4H time frame. We have 4H fair value gap here. So when price created this high, it retraces back, right, forming this minor low, which refers to a structural low before break of this previous high. So one price break this previous high, it gave us a major high here. If you can remember our structure, this is a major high, sweeping liquidity of this low, and also able to take out the structural low. So this one makes this high a major high. Now, when price now retraces, it retraces and sweep this low. This low now is the structural low, the inducement, right? There's a block here. There is a block here, right? There is a another block there. It got invalidated but reclaimed. So this is what I'm just explaining. This is what I've explained now. So this other block got invalidated but reclaimed. So in a real life market, you're not going to see it straight like this. Maybe probably when you go to M15, you will see it. You will see that block that was invalidated. You will see as price was moving to it, it created a fair value gap. Then come to this 4H fair value gap. The 4H fair value gap serves as a support. Then it will now inverse this M15 block that was invalidated, retest it before moving higher. So that's how you're going to see it in the real life market. So which this 4H FVG is respected. Why is it respected? Because it's in line with the order flow. This PDRA, this 4H fair value gap now is in line with the order flow. That's why it is respected. It's respected, pushing price further. Why is this order block invalidated? When is there a break of structure here? Because it is against the bullish order flow. So any PDRA that is against the bullish order flow will eventually get disrespected, while those ones that are in line with it will be respected, right? They're going to serve as support, while these ones will get invalidated. The same way here, for the bearish scenario, any PDRA that is in line with the bearish order flow will get respected, and the ones that are against the bearish order flow will eventually get disrespected. All right, so this is the relationship of PDRAs, either it's order block, whether it's fair value gap, whether it's old highs and low. This is the relationship of PDRAs with the bias or with the order flow, be it bullish or bearish. So let's take note. We will, when we go to the real life market, we are going to see many examples. All right, so this is PDRAs metrics that I talked about uh, earlier. I said we will look at it, but pertaining to our hedge, we will not make much reference to this, because what we want to look into is only reclaim blocks and reclaim mitigation. Those are the two types of entry we will focus on, because the hedge we're trying to share here is going to use those two entries mostly, reclaim block. And once we find reclaim block, we have talked about the things we are going to find in the reclaim block. We are going to find inverse fair value gap there, where the first case the block will be invalidated on M15. It got reclaimed. Once it's invalidated on M15, if higher time frame PDRA 4H will serve as support, then it will push price to reclaim the M15 block that was invalidated. As it is reclaiming, it is going to create another fair value gap, which we refer to as inverse fair value gap. After creating that inverse fair value gap, so it will now retest the M15 block that was invalidated, right, before it now pushes price up. That is if it's for what's it called, if it is for bullish scenario. This is what I'm trying to explain. For bullish scenario, we have price creating high, hold highs, higher highs, higher low, higher highs, higher lows, higher high, higher low. This way we will understand this in details once we go to the live chart, but I just want to explain this with a schematic diagram so that at least we understand what I'm trying to explain. So this for bullish scenario, we will always have higher time frame PDRs like 4H FVG around these legs, Let's assume this is our 4H fair value gap, then another 4H fair value gap here. Anytime price leaves the 4H fair value gap, is going to create another fair value gap instantly, because that's an impulsive move. Uh, that's an impulsive move, and once price is moving impulsively, it means that it will always leave behind fair value gaps, right? So these are 4H fair value gaps. Now these minor lows, there are other blocks that price is invalidating, right? These minor lows, there are other blocks that price is invalidating. So once price invalidate, then the higher time frame PDRA will serve as a support. Then it will now pushes price to reclaim that block. So if you look at CRT video and structure, just like I have told you, these are our strong lows now, right? These are our strong lows now. These are our strong lows now. This is where we are going to find the inverse fair value gap that got reclaimed. These are the regions we are going to find the inverse fair value gap that got reclaimed, right? So, and if we wanted to counter trend this major highs, CRT is going to give us a confirmation on 4H. At the same time, in these strong lows, we are going to find reclaim block. If we didn't find reclaim block at M15, CRT is going to give us a confluence on 4H. Once we go to the live market now, we will get the details better. In these strong lows, is either we find a reclaim block here on M15 after tapping on 4H fair value gap and reclaiming M15 order block that was invalidated before we now enter. The same thing here. M15 order block was invalidated before tapping on 4H fair value gap. That inducement was SIP. Which is M15 order block, right? Before reclaiming it. So after the reclaim, we expect that block to be tested before moving further. Here, the same thing. M15 order block was invalidated before tapping on 4H fair value gap. Then it served as support, and that support now help the M15 what's it called fair value M15 order block got reclaimed. After reclaim, we expect a retest before price moving further. So this thing dey work hand in hand. That's why I say you must understand structure, you must understand CRT before you come back for this PD array. So the PD arrays here you're going to find in these lows, these strong lows, you're going to find a reclaim block here happening. If you don't find a reclaim block on M15, you'll find CRT on 4H. If you want to counter trend, right? I say you can use CRT as a counter trend, right? Structure is going to give us the storyline. After a major high has been taken out with a respect to reversal, we can't just close eye and say, okay, this high, maybe when price get there, this is the last. No, CL2 must give us a confluence on 4H. A 4-hour candle will close inside the range before we can say, okay, this is the last high and price is about to retrace. So that's why your CL2 knowledge is very important. You fuse it together with what? Structure, right? And this third video on PD array before you can really get the idea of everything we are trying to discuss in our hedge. So if you want to counter trend, a CRT must give you a confluence on 4H. If you want to counter trend these major highs, because if you are trading a minor high, if you are trading a minor structure, always it will get, most of the times it will get reversed and eventually go to your SL. So but once you know the storyline, you know the storyline, you know whether price is moving impulsively or is retracing. So if CL give you a confluence on 4H and you wanted to trade this major high, you know that it's eventually coming to take out this inducement. It's eventually coming to take out this minor low before moving further. At this place, you know that it's eventually coming to take out this minor low before moving further. So you can counter trend with CRT, but let CRT give you a confirmation. There's no one saying you shouldn't counter trend a trade, but counter trend from a major high, not from a minor high. If you counter trend from a minor high, definitely it will get reversed and eventually go to your SL. All right, so these major lows and major high, you're going to find reclaim block or inverse FVG. Anywhere there's a reclaim block, you're going to find inverse FVG. So that inverse FVG, a balanced price range should be the refinement of that inverse FVG should be your balanced price range, and that should be your entry. That's where price retraces to sniperly and pushes up. So we will dwell more on this when we get to the live what's it called market. I just want you to understand everything. So this is the PDRA metrics, the hierarchy in order of their importance. PDRA. So once you understand what PDRA, you have to understand PDRAs, their usage very well. I've just explained their usage. Understand the hierarchy of the PDRAs, that is how important they are. Like if you see a lot of PDRAs in a single leg, price is moving, which one should I follow, which one should put price, which one is most important. Then understand the application of the hierarchy of PDRAs, right? The application of hierarchy. For beginners, let's just focus on the reclaim block and the mitigation block we'll be discussing. Leave the application of the hierarchy for now. But this is how important, this is the order of their importance. The most important PDRA, premium discount arrangement, is the mitigation block, right? Yeah, I told you that other block gave us mitigation, right? But when you see mitigation, the mitigation is more important than other block, right? Then the second most important is the breaker block, because mitigation supports continuation trend. It supports continuation, right? And they say follow the trend. You should follow the trend because trend is your friend. So whenever you see mitigation, is more important than breaker. Breakers, you mostly find breakers when there is a change in chalk, when there is change in character or a market structure shifts. So mitigation is the most important PDRA, followed by broker, followed by liquidity void. And I said, for since we are trading synthetics, most of the times we don't have liquidity void, because these liquidity voids happen when there is festive periods, when there is holidays or banks did not work. So but for in synthetic we don't have anything like that. So mostly we don't have liquidity voids as synthetic traders. Then the next one is what? Fair value gap. If you don't see mitigation, if you don't see a breaker, then the next most important fair value gap you should look up to hold price is a fair value gap, which is the liquidity level, the internal range liquidity. Then after fair value gap is order block, rejection block, right? Then your old highs and low. So this is the order of their importance. But the one you focus on most importantly is a reclaim block pertaining to our hedge. I will explain when we get to what's it called, the live market reclaim block, and which one, reclaim mitigation. Those are the ones you focus much more on now regarding this head I'm trying to share with you. So this is PDRA metrics in order of their importance: mitigation, breaker, liquidity void, fair value gap, order block, rejection, and old highs and low. Let's go to the live market now, at least show you all these things I've explained. Then probably the next video we will now dwell much more on how you can vividly mark them out properly, right? Because this video is just for you to understand other blocks, what is it called, PDRA, that's premium discount arrangements, or price delivery arrangements as you may call it. So the next video will now dwell much more on how you are going to use it in the market, both reclaim block and mitigation block. Reclaim mitigation, that one is the high probability. Simple mitigation is not that high probability, but reclaim mitigation is. You can use simple mitigations because they are common in the market. Just backtest and find your edge around what's it called, simple mitigation. It must have overlapping, it must support, there must be a kind of a support. You can't just see a fair value gap creating a mitigation and you are just entering. Before you can enter, make sure it's overlapping. I will explain all those details. So now let's look at some of these reclaim blocks, how you're going to fuse it together with structure and also CRT to uh, always be at the right side of the market. All right, look at this place. You can see all these my dots, right? The black dot, they are my strong lows, and in these strong lows, that's where you're going to find a reclaim block on M15. We are currently on 4H. We are currently on 4H. So I said mark your structure on 4H and always follow 4H bias, right? Trade in line with swing structure, which is the 4H structure. Trade in line with swing structure, which is always make sure the CRT you will be trading is in line with 4H, right? Anytime you wanted to counter trend 4H, make sure you are sure that that is a major high. If it is a bullish trend, make sure it's a major high before you counter trend it. If you trade against 4H with a minor high, definitely it will get reversed. Okay, so look at this place. In the next video I will discuss price objective with regards to higher time frame like daily, because you need to know the objective of price before you can know the storyline properly. So once you know the price objective, you'll be able to build up the storyline. You will know whether price is, the current phase is an impulsive move or it's a corrective move. Anytime price is moving impulsively, you cannot counter trend it, because you know that objective is to either give us a new high, a new all-time high before creating a minor pullback, right? Things like that. The storyline, you're going to do the storyline. I've already told us how you're going to picture the M formation of structures. So the minor high, you're not trading from them. You're only trading from the major high or the major low, or the strong high or the strong lows. In line, even though you find CRT as the price is moving, then make sure you have the higher time frame PDRA as support before it will back your setup, trading it in line with 4H. So this, all these lows, they are what? They are my strong lows. The lows are marked with dot, they are my strong lows. So in these lows, we expect to find reclaim block or CRT as confluence on 4H. On 4H, we are not going to see reclaim block until we go to M15. And synthetic does not have a playback tool, but still, train your eyes. We are going to use the recent price actions to show you how you can use reclaim block to trade profitably, right? So let's look at this place. Let's look at this place. Here, there is no reclaimed, no, there is no CRT confluence here on 4H. We do not see, let's assume price is here currently. This price actions here, they have not formed. Let's assume price is here currently. You can see that there is no any CRT confluence here. This candle closed outside the range, and this candle is a dependent candle, right? This candle is dependent candle. This is a candle that tap on this other block here. So this is strong low. This is strong low. If we go to M15 here, definitely we will see a reclaim block. We will go to M15 and find out. And that's after the market structure shift. But after market structure shift, you can see that this low was taken out. So this low is what? Invalidated, but got reclaim on 4H. So we are not trading this as M15 reclaim block, but as 4H. As 4H, right? As 4H, it's got reclaimed on 4H. So here, this low got invalidated. So we see this one clearly on an M15. On 4H, it tapped on this rejection block, and this rejection block serves as support. There is no CRT confirmation here. There is no CRT. For those of you that have watched CRT, so that's why I'm not like dipping inside what CRT means. There's no CRT confirmation here, but definitely when you go to M15, you're going to see reclaim block here. So let's start from here. Let's start from here. Since this is a recent price action, we are not going to trace it backward before we can see it. Let's just mark this place. Let's mark this region like this. Let's turn it to a new color so that when we go to M15, we see it vividly, because the block there is a rejection block and we have marked it previously. Let's turn this to a new color. Let's turn it to yellow. All right, let's make sure the opacity is a bit thick so that when we go to M15, we see what happened in that region. So we are definitely, there's no CRT confirmation here, but let's see what happened there on M15 with regards to what we discussed now on reclaim block. All right, that's M15. Oh, all right. So the network is a bit coming. Okay, M15 still. All right. Okay, so let's go to M15 now. So still, sometimes network is always very sluggish. Over there, M5. Okay, back to M15. Yeah. All right. So let's look at what you can see it. You can see. So this low was invalidated here. This low was invalidated. This low was invalidated, right? But it got reclaimed. Let's mark out the block now. Let's mark out the block. Let's mark out the block here. You see, and it got reclaimed. So there are sometimes price will not retest the block immediately, right? There are sometimes price will not retest the block immediately. Such is this example. As it got reclaimed, it got reclaimed with what impulsive move. Price did not retest it immediately, but as price pushes up, it come back to that same block and give it a sniper entry. So let's assume we have been waiting for it to retest it before moving further. You can see that it gave us what's it called, a very nice entry there. But the one that is most common is the one that will be retested immediately. The one that will be retested immediately. You can see. So and this give us almost how many 1:6 RR. You can see this give us almost 1:6 RR, because on higher time frame there is market structure shift already. So you can see price is now retracing back, price is retracing backward. But you can see as it got reclaimed, it did not test immediately, but it eventually come back and retested that same block. So this is what we call reclaimed block. Reclaimed block. We did not see CRT on 4H. For those that have watched the CRT video, the candle range did not close inside. We don't see anything like candle range closure, but when we come to M15, it gave us this nice entry with reclaimed block. So this time we're going to use reclaimed block to trade in line with 4H profitably. Let's look for more examples. Let's go back to our 4H. Let's go back to our 4H. The next video we will dwell much on this. This video is just for you to understand what PDRs are. The next video will dwell much on it properly. So as I said all these lows are my strong lows, and these are where I'm going to find a reclaim block or a CRT formation. In this place too, I did not see anything like CRT, but let me mark it. After sweeping liquidity, we anticipate what is it called, a reclaim block or CRT formation. So in structure, I told you that once you are following your 4H, so far a strong low has not been taken out. So far a strong low has not been taken out. It means there is no market structure shifts. Yeah. All right. But in this case, we have a sweep of this low. So this is a strong low. This is a strong low. This one has been taken out, right? It means a strong low has been taken out here. But the reason why we anticipate for this reversal is because we have this low taken out and price is rejecting. So when you see price rejecting after this low has been taken out, then it means that okay, price is about to retrace, even though it's not retracing to give us a new high, but it's going to retrace to tap on a premium level here before moving down. So that's what gives us the confirmation. Okay, price is retracing. Let's try to trade this place either as CRT or as a reclaim block. Because market structure shift have happened here, this strong low has been invalidated. For you to continue with a bullish trend on 4H, a strong low must hold before you can keep trading in line with that 4H. So far a strong low has been taken out, it means market shock has happened. Then anticipate a bearish trend now. But now it come back to sweep this low and is rejecting. So let's see what will happen here on M15. There's nothing like CRT here, but we can trade this in line with reclaim block on M15. Let's go back to M15 and check out. So this is how we are going to use reclaim block on M15 to trade, to frame our entries, and also CRT, fuse everything together, trade the market profitably following the 4H bias. All right, so look at what happened here on M15, where we just marked which low was invalidated, which block was invalidated. This previous block here was invalidated, right? This previous block was invalidated and it got reclaimed. After it got reclaimed, it gets retested immediately. You see, this serves as like a laser inducement that was sweep them. As price sweep it, it closes back inside. Though this closing inside is not in form of CRT, but in form of a reclaimed block. And as I told you that you always find a form of a balanced price range. You see, this is fair value gap. As inversing it back, this is another fair value gap. And you even use this this low here, this block here. There's even a block that was invalidated here too. So you can make reference to this block. You can make reference to the previous block. So when you eventually draw it, you can see that this retest is retesting that block. And okay, let's go back to this line is what I use to represent the block. That's the line that I use to represent. We want to see many examples, so that's why we'll not be drawing the. But when I extended the line, you can see that as price retested, it's retest that line. So this is a reclaim block. After invalidating it, it got reclaim block up, then retest it going. I believe you can see what I'm trying to the details I'm trying to let you know with regards to reclaim block and CRT. So for this case now, these two examples is not CRT, but this is reclaim block. It invalidated, got reclaimed. After it got reclaimed, then retest that same block. This line is what I used to represent that block, and you see it got retested, then it moves higher. So this is how you can use reclaim block to also frame your entries as well. So it's either you see CRT confirmation on 4H, or you see reclaim block on M15, and this give us how many RR. This almost 1 to 6 RR, 1 ratio 6 RR, more than, all right, you see almost 1 ratio 6, 1 ratio 7 RR. So these are going to use a reclaim block as entries, reclaim block as entries, and also CRT. Where did not see CRT confirmation on 4H, use reclaim block on M15. Use reclaim block on M15. We have discussed details of how you can use CRT on the CRT video. So let's focus much more on reclaim block here. Let's go back to 4H and look at more examples, and probably we'll also go to another pair to see more examples. There are more examples, but I can't mark out the ones that the price actions that may be a week old, because for us to go back, trading it back, derived trading view is not like the currencies. We can't use replay to cut it. So this one we just look at now, just before market structure shift, this is also a strong low. Why is it a strong low? This is a minor high, this is a minor low. Price come back to sweep minor low. He gave us this low here. So this low, there is no anything like CRT here, but when we go to M15, the moment price gave us this and it rejected, giving us this green candle rejection, right? We can mark it, go to M15 and look at what is happening there. We can mark it, go to M15 and look at what is happening. The moment this 4H candle closes, this green candle closes, then we should expect a retracement to tap on the what and which block. Okay, let's go to M15 and find out which block was respected and which block was invalidated and how it got respected. Let's go back to M15. All right. Okay, this M15, let's go back to where we just marked, so that we understand details of what happened there. Okay, so you see you see where we marked, right? This is the yellow box we just marked. So you see what happened here. This is an inducement, it means there's liquidity here, and see the low that was invalidated. This low was invalidated, right? This block was invalidated. Let me draw the block. This is the last other block that was invalidated. So drawing it to the right, so you see okay, so you see that it come exactly price. This is the inverse fair value gap, right? You see it got this block I just drew now got invalidated. It got reclaimed. After it got reclaimed, it now return back to the block. Give us this snap entry and pushes up. I believe you understand what I'm trying to explain here, right? It got reclaimed and pushes back and retested, giving us how many RR. All right, let me see where this one lead us to. So you see, okay, our stop loss should always be at the bottom of this, what's it called, low. So how many? This one give us almost 1:4, almost 1:4 RR, and continues. For those that do old trend, well, it retraces here, then you can hold to this trade. If you hook more than one position, you must have taken some partial profit here, then go. So you see, so this eventually how reclaim block works, right? A block was invalidated. Instead of it to form a mitigation block, a breaker block to continue down, it got reclaimed. After it got reclaimed, then we should expect a retest. Why are we expecting a retest? Because the 4H is still bullish, right? So we don't expect price to continue lower. We just know that, okay, this is a liquidity sweep of this low, because this is our previous strong low and it should hold. So since this is our previous strong low, it should hold, then we are anticipating a reclaim, and once it has reclaimed, fine, it will test it back and before going. So the retesting is our entry. You see, let me give us more and more examples. Let's go back to 4H. At least we understand the concept of reclaim block now. We will dwell much on it on the next video, and we'll also touch mitigation block. I believe this video is maybe we should be rounding up. Okay, let's go back to 4H. Let's go back to 4H. Let's go back to 4H. Let me show us one more example in this pair, then we will go to next pairs and at least round up this very section. So this one we just look at now, right? This is another one. There's no CRT here. You use the concept of reclaim block also to form this entry. I don't want us to go too much far, so that once we are checking it, when we go to everything to find where we mark, we should be able to see it. Fine, look at this one here. This one gave us CRT entry. You see this candle closes inside the range candle, and for us that have watched the CRT video, it come back to 50% of the week. It come back to 50% of the week candle. This one worked perfectly fine. So this is CRT. You already know how to mark CRT, so there is no need for me to go and do this one on M15 now. Okay, let's look at this low now. Let's look at this low. This low was swept. This is our last strong low. This is our last strong low. So far this low has not been taken out. We expect a sweep here. Once we expect a sweep, we anticipate a reclaim. Once it's reclaimed, then this block will be respected. Let me mark out what this one is here. Then we go to M15. When we go to M15 and check this, then maybe we go to a new pair and look at one or two, what's it called, examples, and we call it a day for this very section. All right, let's go to M15. Let's go to M15. Let's go to M15. Okay, so now let me go back to what we just marked out now. Let me go back to what we just marked out. Let me go back to what we just marked out, so that you see that reclaim block and mitigation block. Reclaim block is actually CRT, but where CRT did not give us confirmation or confluence on 4H. You know, before you can see CRT, you are using your 4H candle. If it did not give you confirmation on 4H, come to M15 and see if a reclaim block form. If a reclaim block form on M15, just wait for a retest, right? So it's either you use CRT on 4H as confluence, or you come to M15 and use reclaim block. Reclaim block and CRT, they're the same type of entry, and it's not a must you wait for it as a strong low. You can okay, when we go to price objective, you know that anywhere you find CRT, so far there's a base, there's an item frame PDRA that can serve as support. You can trade it anywhere, so far it is in line with 4H. It's not a must you wait for it at strong lows. Okay, see what happened here. This low was invalidated. This inducement was invalidated. Our last strong low is 4H. It has not been taken out, right? This is our last strong low. I believe I mark it here good. This is the dot that represents the last strong low, and these are laser inducements, right? And this the sweep of these lows, right? And this is the block that was invalidated. This one is the inducement. This block is what was invalidated. In this case, a rejection block. It's a rejection block, or we can make reference to this. We can make reference to this, and let's draw it. Let's draw it to the right. Okay, I'm using it the same color. Let me change the color so that we know the difference. Let me use this color as green, so you can see, and you see the block is in line with our balanced price range. I told us I've not even explained much about balanced price range. I said balanced price range, when it's invalidating, it's going to create a fair value gap, inversing it back up, reclaiming it another fair value gap. So draw the among the two fair value gap, which one is the smaller one. If it's the manipulation fair value gap that is the smaller one, make sure you only draw the smaller one. If it's the inversing fair value gap that is the smaller one, let's assume this is the smaller one now, from that up to this low. So that's a balanced price range, and it's in line with the block. So it got inverted. As it got inverted, it reclaim it. That's what I mean by inverse. It reclaim it and retest it. I believe you can see. So this is reclaim block. Once it got reclaimed, just wait for a retest of that block. Simple as that. Simple as that. Let me show us one or two more examples on another pair, and let's round up this video. and we will dwell much more on this entry pattern, both CRT reclaim block and reclaim mitigation by special grace of God in our next video. We will dwell much on that. Let's see one or two more examples on jump 10, and let's call this video let's run everything up. This video should be getting to an hour if I'm not mistaken. So this is jump 10. Let's look at one or two more examples here. Let's look at one or two more examples here. You know, we need to know the price objective. We need to know the storyline. The next video will also explain that. The purpose of this very video is just for you to understand PDRs. Alright, so this is M15 already. This is M15 already. There's no need for us to go to 4H to find out if there's CRT formation or not. Let's just dwell much on reclaim block here. Then the next video we talk about reclaim mitigation or reclaim breaker. Okay, so this is the block that was invalidated. You can see this block was invalidated, it got reclaimed and it got retested. Simple as that. I represent the block with a line, and let me extend the line. It retested, right? Fine. It retested and it's pushing back up. It's pushing back up after it got reclaimed. So let me show you more another example. For this case, we can say, okay, this low was what was invalidated. This box is an higher time frame PD array. Probably maybe this is okay. This is a mitigation box now. This is 4H mitigation. This is 4H mitigation. Let's go to 4H and check out the 4H mitigation. Let's go to 4H and check out. This is 4H mitigation, right? All right. Okay, good. So you can see this box is their mitigation box, their mitigation blocks, right? You can see, okay, the first one is a breaker block because this is a trend, this is a downward order, this is a bearish order flow, and it turned bullish. So this low, this previous high that was invalidated on 4H, price retested twice, forming a breaker block. But for this one, okay, this one is also in form of a breaker because this is a previous trend, this is a previous bearish trend, it turns bullish. This is a breaker block as well. You can see how breaker blocks are working on 4H, right? This is a breaker block, another breaker block. But for this, okay, this one is also in form of a breaker. Okay, the last one is actually a mitigation because this 4H trend is an existing trend, right? It is only here that this is a bearish before it turns bullish. But for this one, this is a mitigation block. So that's why a lot of people are confused about mitigation and breaker, but they are different. So here, there is no CRT confirmation. This is the one I just explained now. Here, this is pure CRT. You can see the CRT candle tap on the breaker block. It closes inside the range candle. It retested 50%. If you have not watched CRT video, go and watch it. There's no need for me to go into details with CRT now. It closes inside. It retested 50% of it. Fine. This is reclaim block. This is CRT. It worked out fine. Okay, let's say we wanted to trade this in form of a reclaim block. Let's mark it and let's go to 4H so that we have a clear details. But for this case, it shows us CRT on 4H. It shows CRT on 4H. But let's say it did not show us CRT. We wanted to go and find out on M15 as a reclaim block. Let's see how it's going to look like. I don't want us to go back to the previous prep action because once we come to M15, for us to go and check it, it means we have to retrace. Alright, so this is where we just marked out now. You know, it gave us CRT on 4H, right? It gave us CRT on 4H. Alright, let's say we wanted to trade this in form of reclaim block. Where is the block that was invalidated? Okay, did it sweep this low? Yeah, of course, it weak this low. But you can even refer to this block here. We can refer to this block. We can refer to despite the fact that it gave us little reaction, but it's still invalidated. So if you draw this block to the right, you can see that it got reclaimed. After it got reclaimed up, then retested it before moving higher. So you can either trade this as a confluence with 4H, CRT on 4H, or you trade this as a reclaim block this way. I hope we can see. So I think we'll be stopping here. Our next video will dwell much more on this. We will explain then into details. I will also discuss the objective of price with regards to the higher time frame, maybe like daily. We need to know the objective of price so that we won't just be picking a random random setup, right? Trying to trade it You must trade it in line with 4H. You must know the price objective. You can't trade against the objective. If you are trading against the objective, definitely that setup will eventually go to SL. So your trade must be in line with the objective. You can't trade against the objective. You must trade in line with the 4H bias, where the 4H is going, right? Where the 4H is going at the moment. The daily objective may be, okay, price is trying to give us a new high or a new low, but the objective, the 4H may be tracing as a counter trend, and you are trying to trade against it. Yes, the objective is correct, but where 4H is going, you are not trading in line with 4H. So you have to look at all these things, and we need to understand them perfectly, right? We need to understand perfectly. You are trading with the objective in mind. You are not trading against the objective. You are always following the 4H bias, all right, and you are able to fuse CL2 reclaim block and mitigation blocks together. This is basically what you need to become profitable trading our hedge, right? So I believe with this you understand what's it called, PD arrays. Now you understand PD arrays perfectly. So I'm going to stop here. The next video we will run everything up. You understand structure, you understand CLT, you understand PD arrays, most especially reclaim block and reclaim mitigation. Those are the two high probability ones among all. Then you understand price objective at each moment. From price objective, you're able to develop the price storyline, right? Whether it's an impulsive move, whether it's a corrective move, that's what we're going to help you to develop price storyline. Then trading in line with the objective of the price on higher time frame. So these things you need to understand them perfectly. You need to understand them perfectly. So basically, the reclaim block is for your M15 PDI, is for your M15 reversers, but this is a 4H pro trend continuation, whereby your CRT, it is for PH, is for 4H, it's for what? Your 4H confluence. Your CRT is going to give you confluence on 4H. Your reclaim block is for M15, it will give you confluence on M15, but CRT will give you confluence on 4. That's the two basic difference there. Alright, but it's the same entry pattern. If the 4H did not give you the CRT confluence, come to M15 to find a reclaim block for you to join the trade. Alright, so if you want to join our elite members group at Zenith Trade, you can see my number at the bottom left hand side of your screen. Dial in for you to be a member of Zenith Trade. There are criteria that you need to join the elite or the pro members group, and as I've said in the previous videos, any trade you took and eventually it hit SL, that trade must be reviewed. We have somebody out there that will hold you by the hand to always review your trade, so that any mistakes you make, you journal them, and reviewing those trades will actually give you room to improve at each of the trades you take. It gives you room for improvement at each of the trades you take. The difference between a profitable trader and someone that hasn't been profitable for a number of months, years, is you reviewing each of the trades you took. And when you journal, you make sure the mistakes are taken note of. You don't go back to such mistakes again. So that means for you to know the criteria, everything is free, but there are criteria for you to be a member of those groups. All right, as I've said, the next video is going to combine everything we have done so far, especially this entry pattern or reclaim block and reclaim mitigation. They are very, very important. If you're able to get your head around them properly, believe you me, you become very, very profitable. You'll become very, very profitable. So the next video we combine everything, and we will dwell much more into deeper details. Reclaim block, mitigation, both simple mitigation and reclaim mitigation. The reclaim block is for M15 reversal, but it confirms 4H pro trend continuation. Then the reclaim mitigation or reclaim breaker is for M15 continuation trend only. All right, so watch this video as many times as possible so that you get your head around it. You can't just watch it one single time and you expect to get the whole clarity of what we have discussed. Watch it as many times as possible. The more you watch it, the more clarity you get. The more you watch it, the more clarity you get. The more you watch it, the more clarity you get. There's not any PDF attached to this. I can send some little what's it called, I can attach what's it called, YouTube links for you to go and get details of this the PDRs we have discussed. Maybe the CISD, difference between the CISD and market structure shifts, mitigation blocks, the breakers, the I can attach links to access some YouTube videos, but there's no any PDF. What I've basically explained is what I've explained in the video regards reclaim block and mitigation is what you get to like. There's not any PDF that's going to be attached. So as I've said, the next video will be objective, reclaim block, breaker, reclaim block, then reclaim mitigation and reclaim breaker. Those are the three things, and price free line, which is the price objective on higher time frame. These are the three things we very much more on. So anticipate the next video after this premium discount arrangement video, and it's going to round up everything. I believe I should stop here. You have a nice day.